This is the briefing for Friday, January 27th. Well, the stock indices are at a point of decision, and I think we'll know more potentially on Monday, but keep in mind there is a Fed meeting that starts on Tuesday, and the announcement of whether we're going to get interest rate increases and or how much they will be on Wednesday at 2 p.m. Eastern Time. This is a weekly chart of the spiders, the SPY. And you can see that, as I've been discussing in the briefings, that there is a possibility that this is a run in terms of a downtrend, series of lower highs and lower lows. But this appears to be developing into a greater degree time and price counter trend rotation, which would typically take out the last previous high before we'd see the potential for another leg to the downside. Now, there's two scenarios here. One is this is developing into a counter trend rotation where there's equality between legs 1 and legs 3. That would project it to go up to about the 437 to 440 area, which would just take out this high. Now, the important part is what we did in today's trading, in Friday's trading, we came up to this 410 area and paused. In fact, we have a little bit of selling that came in right at the close that caused the market to close just below the 410 area. So trading above 410 on Monday or Tuesday would then suggest the next upside resistance is 440. Now, I want to go back to the Qs here, and you can see the Qs are a little bit different. We have the same downtrend, a series of lower highs and lower lows, but you can see the rotational pattern that's been occurring in the Qs with a move lower, a rotation up, a rotation lower, another rotation up, coming right up to this 295 area and pausing before we got a little bit of selling that came in right at the close today. So the Qs are right at an important key reference area, an important resistance. If they break through 295, the next level of resistance is going to come in right around 334, which would be this high, and that typically would get broken. Now, this is a little bit different because there's not equality. If you look at this, there's equality potentially between here and here, but in terms of whether this is three-step or not, it's really not. It is a rotational pattern. So if it's unable to break through this 295 to 300 level, then we're going to see rotation back through this range. These are the October lows, and if the October lows are tested, then we're going to see them taken out. I feel that's the higher probability. Going back to the spiders, the next level of support in the spiders comes in right around the 374, 375 area. Now, if we were to get a move down off of this 410 area in the spiders, breaking through this 374, 375 area would then increase the probabilities that we're going to see a test of the October lows. And I would venture to say that if we test the October lows, we're potentially going to see them taken out. Now, one of the things to keep in mind with the two indices here, the spiders and the Qs, is the fact that volume is decreasing on this complete move. You can see how volume was fairly decent. This is volume in the spiders, but is basically flat. It's really not expanding. There's a slight uptrend in it, but it's really not expanding. And more importantly, breadth is declining. Now, this is a weekly chart, so you can see the breadth divergence right there. The same thing is occurring in the Qs. We'll go back to the Qs. You can see volume is extremely low, had a little bit of spike in volume today on the Qs, but you can see the divergence in NASDAQ breadth. Now, we want to go a little bit deeper into this. This is a daily chart of the spiders, and you can see this is the move off of the October lows, and then we get this three-step counter trend rotation here at 410, and then of course looking for the spiders to come in about the 437 to 440 area if there is equality. And you can see a little bit better. Now, this is volume on the spiders. You can see a little bit better how volume is diverging. This rally is not attracting new buyers to it. In fact, with each day that we see higher prices, there's fewer and fewer buyers coming in. Same thing with breadth. NYSE breadth is declining as well. Looking at the Qs on a little bit shorter term basis, you can see this move here right up to the 310 area. And then, of course, you can see NASDAQ breadth diverging and volume just basically flat in the Qs. So it is not attracting new buyers to the market either. So this gives me a little bit of concern in going forward. Now, the internals are diverging, and I've discussed this, I think, almost every night this week in the briefings, that there's always a higher probability that price is going to correct to the internals. There is a lower probability, it's not 100%, but there's a lower probability that the internals will correct and support price. But that typically occurs around a news event. So right now, in my opinion, the indices, or the market in itself, is counting on a 1/4 point interest rate increase on Wednesday on that announcement. If that increase is 50 basis points or even 75 basis points, I think the market could have some real struggling here, especially at these important resistance and key reference areas. If the announcement is for a 1/4 point basis increase, this could be one of those things, and the old saying is buy the rumor and sell the news. The market certainly is been going up, not based on good information, but based on the fact that they are anticipating the Fed backing off on interest rate increases, or maybe even taking a break. So what happens on Wednesday could change the divergences that are occurring now. Now, if there was not a divergence in the market internals and the rally was continuing, I would suggest that you certainly want to be long this market. But with the internals declining like they are, then that suggests the higher probability, assuming there was not a news announcement next week, is that the market will correct to the internals. And we've seen that many, many times in the past. So just be cautious in the coming week. You have to respect the development of price. The trend, at least in this time frame, is up. But watch what's happening with the internals, especially with market breadth. As more and more shares begin to trade lower, which is happening, then it's eventually going to weigh on the indices. The higher weighted stocks can certainly keep the indices up for a while, but if you see the others beginning to weigh on even the higher weighted stocks, you're going to see price make a change, and we're going to see it come down. I think next week could be a very, very important week with whatever the Fed announcement is. Now, looking at where we are in terms of overbought and oversold, we are basically neutral in both the NYSE and the NASDAQ, so that gives us the opportunity to really go in either direction. So the overbought oversold indicator is really not any help at this point in time, except for the fact that you can see the NYSE is converged, the indicators are converged. That suggests a tightening somewhat in the NASDAQ. But that suggests a tightening within the market and the potential for a break in one direction or the other. If the tightening had occurred up in this territory here, up in extremely overbought territory or oversold territory, it would give us the opportunity of a little bit higher probability of a break in the opposite direction. If it was overbought, then we'd potentially see a move to the downside, but it is neither. Now, this also is net volume on the NYSE. So you can see net volume is declining. That's up volume minus down volume. That's declining. Same thing with the NASDAQ. It's declining. We had a little bit of a spike up in today's trading. So even the net volume is declining as we came into the end of the week. It's going to be very interesting. Now, most of the time when we are in front of a Fed announcement, we typically see the market pause. But I think this market is anticipating just a 1/4 point move. It's going to be very interesting to see what happens on Wednesday. Have a great weekend. I'll pick this back up on Monday.